And getting started with all the management conversations that we've got lined up for you on the show on the back of Q1 earnings. Let's start by talking about ABB. The company has seen a steady quarter with record Q2 orders, which surged by 50%. My colleague Sajid caught up with the management for their growth roadmap, and here's a snippet of that conversation.
Yes, we thanks for having us, and yes, we do see strong growth, our way, and we have captured it, and we do see a robust growth in certain market segments, which we are closely connected with in coming quarters as well. As you know, we are exposed to multiple market segments, about 23 of them, with 16 businesses that we run within this company. So we are seeing good growth spread across. As far as the commodity pressures are concerned, yes, they are known factors right now. And what we focus on what we are focusing on is to really, meet the demand in the market and serve our customers in a very stable way. That's our prime focus. And commodity is more like an input cost, which we kind of take part of our business as we go along.
When the global parent came out with its update, it gave a highlight of 80% order jump coming in from the Indian continent. Can you give us a clarity on that statement and the 50% jump that we saw in ABB India?
Okay, let me take this question, Sajid. I think so. The group said that in India grew by 80%. When they talk about what is this, this basically orders which come out of India to the ABB as all, right? So that's something which we need to understand. And when we report 50%, it's all those orders which ABB India books. So there's actually a different meaning to that. So now, why is this different? I think a couple of orders were booked by the ABB group companies for offerings which ABB India was not capable to produce and deliver, right? And that's something which we are building competencies, and that is especially in the marine and boats, where the systems are provided by the global ABB companies, and we provide all the support and in terms of installation, servicing, and servicing the customers over here, right? And this is natural way by which the new systems get implemented or introduced in the countries. So marine and ports is the next growth journey which will happen. And that being the case, we are setting up that install competency in India in a few years to come. So that's the first step which we had. So I think other than that, we did not have any demand which is from India for the 16 business levels. What Sanjeev was alluding to was not missing ABB India Limited orders.
Give me also a sense of the margin picture, Sridhar, and what kind of challenges you are facing, and how are you, offsetting that impact?
Yeah, I think margin today we are impacted. We have been impacted by the commodity and volatility, and also the forex volatility as such. So these are the two important topics which we are dealing with. So how are we going to address this? Of course, I think the first comes is how do we pass on this impact to the markets? And because we being today a flow business, naturally the price on inputs is taken in first, and then we time it out to the market. It's important that we make sure that we are timing it correctly so that it doesn't affect the market presence of ABB here. So I think that's something which we are doing, and of course we have the other value chain actions which keeps our margins in the reasonable corridor of 12 to 13% at this point of time. So Sajid, I think just to go to the next step, I think for the next few quarters, as what we see, it will be more of a volume-led growth because these macroeconomic factors are going to still remain a bit volatile going forward is what we see. That's the trend which we see. And therefore, we are cautious about it. But our prime focus is to serve our customers, be a scale in this market, and therefore we have a reasonable growth going forward.
Sanjeev, volume-led growth, but are you able to pass on the higher commodity cost to your clients as well?
I think the first priority we keep as a company is to support our customers who are equally facing the similar market pressures as we are. So in first case, all the contracts that we have taken from the clients, we make sure that we deliver them. And we operate in very mature market segment with very mature customers. They know when the input cost increases, at some point it gets passed on to them. And we know that in coming quarters, we will normalize them and we'll reach a new equilibrium of prices.
Among your 16 businesses, which one was performing full throttle and which one is lagging behind?
All divisions are performing quite well, Sajid. In fact, as I said, that's the beauty of being exposed to multiple market segments. There is always some segments which are lagging, but then there are certain market segments which are on the hyper scaling mode. So we take benefit of that. So we don't have a single business which we are really concerned about at this point.
Data center is something which is emerging as a big opportunity for many companies, including yours. And while we don't have a AI play in India, the AI ancillary play is played through companies like yours. What kind of opportunity do you see there?
We have been talking about data centers for last 7-8 years now because we were the first one who detected these opportunities, and we started supporting the hyperscalers who started putting in large data centers in the country, and we have been very successful in creating those capacity and help and support our global as well as local customers. Now, at this point of time, the market has really gone to the next gear. After US, India stands out as a market wherein a lot of data center capacity is being built in short and medium term, and we believe that's quite positive for us. In last few years, we have created capacities and capabilities to be able to cater to these demands. So our customers are quite pleased at this point of time to receive deliveries on time, as well as equipment and technology they require locally to build this data center.
And if I were to ask you, as part of a total revenue mix, how big will be data centers?
It ranges between 14 to 17% at this point of time. And given that we have a multi-market segments exposure, we feel that's the kind of a percentage it will rotate. But coming years, the pipeline on data centers is pretty strong. Given how much volumes that we bring in, I think it will fluctuate a little bit around that range.
Electrification was one segment which did exceptionally well this quarter. Do you expect multi-quarter performance coming in from this segment?
We do. I think that will be a consistent feature, part of our books. But also we see quite a strong growth coming from renewables, power distribution, electronics, manufacturing, and also certain other market segments which we have been traditionally quite strong with.
Sridhar, capex requirement, you spoke about the fact that there are certain capabilities that you're building yourself. What is the kind of capex that you are putting in to building these new capabilities that's required, or what the market is now asking for?
I think the beginning of the year, we did declare roughly around about $60 to $70 million of investments in terms of capex. I think every year we spend 35 crores of capex, which we make sure that is available for future expansions and growth. And that's something which will remain consistent. I don't think there will be anything which will be retarded at this point of time. So, recently we added one plant to our portfolio. So I think earlier we used to have 5 locations. Now we have 6 locations. We have a second, the newest location which has been inaugurated some time ago. So that will also add to the capacity that we enjoy.